Shares of the US tech giant Apple falling by 10% in a single day grabbed headlines globally. This was in response to Apple slashing its revenue projection, the first time this has happened in over a decade. The reaction to this was apocalyptic, triggering a sell-off in US markets followed by around the world. Let's do a three-point analysis of what's not going right for Apple and does it concern India in any way. 1. What's the reason behind Apple lowering revenue projections? Well, slowing sales in China, Apple's key market, was the primary factor behind its lower revenue projections. In addition to that, much of the bad news appeared to stem from peaking of smartphone demand. Apple grew by 1% in China in 2018, while Huawei and Xiaomi grew at 41% and 43% respectively. Apple now ranks 5 in the top 10 smartphone making companies in China. Local competition with attractive pricing is making it harder for Apple to sell its premium phone. The moot question is that why slower mobile phone sales from only one company is such a big deal for markets. Experts believe that other companies could face similar problems because of the Chinese economy slowing down. The fallout from a Chinese economic slump is already visible in certain sectors like auto and will potentially hit large multinationals that are doing business in China. Multinational companies are vulnerable to economic slowdown in China due to the exposure of their manufacturing supply chains to China and also because China is a key consumer market. 2. Is the threat of Chinese economic slump bigger than US slowdown? Well, China confronts huge economic challenges. It has been gorging on debt for almost a decade, which has started to now look unsustainable, prompting talks of economy's hard landing. Global environment is turning hostile with unresolved US-China trade issues, and that is further adding to woes. The latest contraction of Chinese PMI is worrying. The investment world seems to be more worried about US slowdown. But the bigger cause of concern is the potential pain that slowing China can inflict on global growth and markets. 3. What could be the implications for India then? India is unlikely to emerge unscathed of the slowing global growth. Having said that, it is relatively less vulnerable to growth slowdown as large part of its growth is propelled by domestic consumption. Does this mean that India will become the next China? Well, not really. India's economy is 1/5 of China, and assuming the 2017 trend continues and India grows faster than China in the decade ahead, its rise will not be a simple catch-up story. That said, changes in the global economy are shifting India's way. We can expect softer commodity and crude oil prices on account of China slowing down and subdued global growth outlook, which also bodes well for energy importing Indian economy.